Good afternoon. Happy Monday to everyone. This is a very big week, not just for Zach and I, but also for all of us. We got FOMC this week. We're going to talk a little bit of crypto. But first, to kick it off, Mr. Zach Pandl, head of research for Grayscale, is here with me. In fact, we're both here because we're going to be starting a new podcast on a monthly basis for now. We're going to be bringing you guys a lot of content and focusing a lot of the macro, which is very tied in with Bitcoin and how crypto moves together. So, Zach, how are you this morning, sir? Or afternoon? I'm in California.
Yeah, afternoon here on the East Coast. I'm awesome, Sam. Great to be with you talking about these topics, and what a perfect week we chose to get started.
All right, perfect. Yeah, I know. I mean, it's obviously not going to be a quiet week. We have the largest central bank in the entire world, basically reporting on the expected 90% plus 25 basis points rate cuts. Had a little bit of a scare in the last couple of months, but I think the market has shrugged all that off, and we now know we're going to be getting a rate cut on Wednesday. But the bigger question is, what's the commentary going to be like? Is it going to be a hawkish cut or a dovish cut? What are your thoughts on that exactly? Do you think Powell's going to come out there August 2022 Jackson Hole style and just make the markets drop 5% intraday? Or do you think it's going to be like the normal, we're going to cut and we're going to stay data dependent and so on? The market will just float to new all-time highs.
Yeah, that's a great place to start, Sam. Before my life in full-time crypto, I was essentially a professional Fed watcher, keeping an eye on these types of things, trying to guess what they would decide at the meeting, what the vote was going to be, what the language of the statement was going to be. And these things matter hugely for the bond market and currency markets, and increasingly for crypto. So we apply some of these lessons to our work here at Grayscale. Look, I think big picture, you have a desire to keep interest rates relatively moderate in the U.S. economy for a variety of reasons. But one big overarching reason that I think sometimes gets lost in these conversations is the debt stock. I believe, and this is kind of a core thesis for us at Grayscale around Bitcoin, around Ethereum, sort of the scarce macro asset parts of crypto, is that you have a lot of debt. And every time you lower interest, you lower the cost of servicing that debt. So in some kind of big picture sense, looking over the next couple of years, we think interest rates will be kept moderately low, partly because that's the desire of the Trump administration, fiscal policymakers, and probably that'll lead to some inflation over time. What about this upcoming meeting? Look, I think it's going to be mostly good news, honestly, for markets. As you say, it's 90% priced in, but that means 10% of people still could be surprised with a rate cut. And I think in general, given that the labor market looks a little bit soft, that you will have a supportive message from Chair Powell. So I think this will be a good news, maybe a slight lift for markets into the end of the year from this meeting. And then beyond that, and I'm sure we'll talk about this here today, we're going to need to think about what comes next after the December meeting. And a lot of that's going to have to do with who replaces Chair Powell. He steps down next year. We're already in that discussion of who's going to be really guiding policy after his term is over. That's going to determine what's priced in around the Fed, beyond this upcoming meeting.
Great. Yeah, actually, now that you mention it, I think Trump has, I don't want to like jump to conclusions here, but it almost sounds like he's basically saying Steve Hassett is going to be the new FOMC chair without actually saying it. I mean, like,
Kevin Hassett.
Sorry, my bad. Kevin Hassett.
That's okay. Yeah. Look, I would consider it a trial balloon. This is kind of how Washington works. He's probably has approximately made that decision, but is trial ballooning it in the press to make sure that that there aren't any very important constituencies that are resistant to Kevin Hassett's nomination. You don't want to go through the process of nominating someone, putting them through the Senate, and then not being confirmed. So I think that's what's going on here. I would read that recent news as kind of a trial balloon. It seems likely that Hassett is going to get the job. I think he's a solid economist and will be widely supported in the economics community. I think it's going to happen, but we'll see how the press plays out in the next couple of weeks. But it does seem like Trump has probably chosen Kevin Hassett as his first choice as Fed chair. That's how I would interpret the recent news.
Yeah, no, that makes a lot of sense. It's really funny how the president tries to be a little bit inconspicuous without being. It's like, yeah, the new Fed chair is in this room right now, and it's like, well, it's not him. It's not him. It's obviously going to be Kevin right there. And that would be bullish for markets, and that would be bullish for crypto. Like he's very pro crypto to the sense of expanding liquidity. He's pro crypto in terms of bringing up decentralization of banking assets, and basically it just seems like you can't have Trump saying that he's going to make sure the market's always at all-time highs during his term without seeing crypto at all-time highs. And as you pointed out in your report, even looking at the technicals, it appears that Bitcoin likely will not hit that new low that it hit in November 24. I mean, that was actually probably a pretty scary moment for a lot of people, mostly for people who bought Bitcoin at 126K recently, but more so that is this the end of the crypto cycle? But again, if you have the Fed basically ending quantitative tightening by letting the bonds roll off the balance sheet, and then you also have them possibly starting quantitative easing, that only means additional liquidity into the system. And everyone knows that amazing chart where it's global M2 money supply correlated with Bitcoin. I think that's probably to continue. I do think that Bitcoin is likely going to make a new all-time high, but a large amount of that is really dependent on markets making new all-time high. If that'll be the case, there's always been like that little a little backdrop saying that Bitcoin is like a call option on the Nasdaq. But what we've noticed recently is that it's kind of decoupling a little bit away from that, where Bitcoin is actually starting to become a bit more correlated with not necessarily gold, but in its own nature, where the Nasdaq doesn't need to go up for Bitcoin to go up. But the thing is, it's weird because we're sitting here basically near all-time highs. I mean, today maybe not so much in the S&P 500, but crypto is just, I don't want to say it's dead, but like you're not really getting that massive bidding. And it makes me wonder, like, is the market really waiting for a certain event to happen for crypto to finally get that bid up? It certainly doesn't want to go back down. But the question is, where is it going to go from here? Because I'm sure there's a lot of people eager to jump back onto the crypto toward the end of the year with the usual end of the year, end of the month window dressing. What do you think crypto is going to be like looking like early next year, in your opinion?
Yeah, a lot of interesting points there, Sam. Let me say a couple things. Look, from a fundamental standpoint, crypto is so far away from dead. It's hard to find the right adjective. I think anybody that is focused on the long term, focused on building businesses, focusing on the policy side of things, whatever it may be, kind of players in the space. It's enthusiasm all around. I think people feel great. We feel great about where the industry and asset class is heading. And it's really two big things, and we could talk about both of these things in more detail, but they touch on points that you're making, kind of two big pillars of that optimism. One is macro demand for alternative stores of value. So this debt issue, the risk of dollar debasement, this is not going anywhere, and it's not a long run issue. It's a present issue for people that are building portfolios and managing risk. So that macro demand for Bitcoin and Ether, the sort of scarce commodities in crypto, that's going to continue. And then the second piece is regulatory clarity driving institutional investment into the asset class, really kind of blockchains going to Washington and to Wall Street, over these few years. These two big fundamentals still very much in place and are the reason for my own optimism heading into 2026. Now, from what part of the market is dead? Well, it is true that the kind of speculative trading part of the market is a little bit dead at the moment. Maybe tired is not dead. It's certainly not for good. But we did have this big leverage unwind event on October 10th. I know something that you've talked about on your programs. But perpetual futures markets, which are typically leveraged instruments, are a big part of the crypto marketplace. And you had a big leverage washout on the 10th of October. And that part of the market has not really rebounded since that time. We look at open interest on perpetual futures contracts, and that's basically been coming lower week by week still on centralized platforms like Binance, as well as on decentralized platforms like Hyperliquid. That kind of futures trading is still pretty soft. So I think when you talk about kind of market conditions today, I mean, to me, it's really this big divide between the kind of longer term industry fundamentals that look really positive. And I think they give people that are building for the long term a real positive view at the moment. But it is true that the kind of shorter term trading oriented part of the market is a bit downbeat. Still, we haven't seen that come back. So putting it all together, what does it mean? I think probably we hit bottom at about 80,000 on Bitcoin around November 20th. But not everything looks great. Not all that kind of futures trading activity has come back, et cetera. And you want to see a bit more of that to maybe confirm the bottom. So I feel pretty good about where the market is, but still watching some of these kind of derivative markets or kind of shorter term trading oriented parts of the market to try to confirm that we've hit bottom. Again, we could talk about all that in more detail, Sam, but that'd be like a high level how we're thinking about the market here.
Yeah, I noticed also on your report you were talking about a Solana breaking point. Can you explain a little bit on that one?
Solana Breakpoint is an annual conference for the Solana community that's taking place this week in Abu Dhabi. Really the kind of feature event for Solana, all the builders and investors in the space. A couple of my colleagues, took the long flight to Abu Dhabi to attend that conference, but an extremely important part of our work is to stay in touch with each of the major ecosystems, and Solana, of course, we would consider one of the major ecosystems. Solana in a great place at the moment, really the kind of leading fast, cheap blockchain, seeing ETF products come to the market that have staking enabled. So an encouraging point for Solana. And it has competitors. It competes with Ethereum. It competes with other smart contract chains for a slice of tokenized assets, stablecoin volume, these types of things. But, we think Solana really one of the leading projects in the space. Great to see the energy around Breakpoint this week.
Yeah, honestly, the institutional interest in Bitcoin is still there. Obviously, regarding the price action we've seen recently, maybe not so favorable for short-term traders, but from the long-term perspective, I have been adding to my HODL portfolio for crypto for quite some time. I think it's a good opportunity to add, especially if you're thinking more in the terms of decades, per se. But it's definitely, the story's not really turning around. Like, you're having international interest in bringing up other crypto coins or other altcoins that are in the space, namely Solana. Ethereum obviously is a big one, with Tom Lee continuing to buy or accumulate ETH up to that 5% total supply with Bitmine. And then you also have, like you mentioned, you also have the Abu Dhabi event for Solana occurring. I think these are all going to continue. I think that the institutional interest, as well as the financial, as well as the banks around the entire world, and then on top of that, you're also hearing that the U.S. is going to be starting a strategic Bitcoin reserve. And if that starts happening, then you're going to have basically a floor in terms of crypto price, because you're always going to have the buyers, the large institutional buyers, governments, sovereign governments, central banks, and everything at some point continuing to buy Bitcoin. It so much makes it like an easy, I don't want to say an easy prediction, but when I say that there's been talks that crypto is dead, I'm talking obviously from a short-term perspective, and Bitcoin going back down to like sub 80K is considered dead for a lot of people on X. But obviously, I write that as opportunity when you think of accumulating for the long term. I mean, every single cycle that happens for Bitcoin always ends up creating like a floor or a bottom for the new cycle ahead, right? So you had basically Bitcoin bottoming around like 20K for the previous cycle, or the beginning of this cycle. The one before that was like 3 or 4K. It kind of makes you wonder, like, did we already hit that bottom for this cycle? Are we in the beginning of a new cycle? And
Yeah.
if you attribute that to the open interest you're talking about, is that cycle going to be totally present, and is the inflows going to be just in Bitcoin, or are we going to start to see, especially we see the technology from all of the other blockchain starting to show effects in the network? is that also going to appreciate the prices of other major market cap assets? I mean, you have Ethereum, obviously the second largest market cap when it comes to the crypto markets, and then you have Solana, and there's Ripple, of course, and Chainlink, and all those other altcoins. Is this the cycle where we're going to start seeing these other altcoins having their own cycle in that presence, considering all this institutional interest in these other blockchain assets?
Yeah, and I'm curious your thoughts on this as well, Sam. This question about the 4-year cycle, definitely an important one as we're heading into 2026. You look backwards. Let's just take a step back. Think about where we came from. 15 years ago, Bitcoin was the only asset in crypto, and it was worth $1 million. And today there are 50 million assets, and Bitcoin is worth $2 trillion, right? So this stuff has come a long way, and along that journey, there have been these sort of apparent cycles. Like every 4 years or so, there's been a big drawdown, and we know that Bitcoin halvings happen every 4 years. So there's a kind of folk wisdom in crypto markets that Bitcoin's price will follow a 4-year cycle. We've had a 3-year bull market. So as people are looking into 2026, there's, definitely among some crypto OGs, or, and certainly people that I think more about crypto than about broader markets, are concerned about a big drawdown this year. Look, I don't see it. I don't think that we're going to have a big cyclical top here. And our expectation would be that Bitcoin makes a new high in price in the first half of 2026. So we had a high of 126,000 on October 6th. My expectation would be that we have a price higher than that at some point in the first half of next year. Now, of course, there's a lot of things moving around at all times, but I certainly do not agree with the 4-year cycle thesis. We think that you have important drivers of the asset class, macro demand for scarce digital assets or alternative stores of value, and regulatory clarity. We could talk more about that on the legislative side of things, Sam. And then, those are the two reasons that people are entering the asset class. And I think the other thing I feel strongly about is there will be capital. There is going to be capital coming into the asset class, driving valuations up. It's very hard to be pessimistic about crypto working at Grayscale when we are doing phone call after phone call after phone call with institutional investors, learning about crypto for the first time, doing the analysis of how to build these assets into portfolios, doing the due diligence on our products to make sure they meet all of their portfolio needs. That capital is going to be coming to the market next year and beyond, I think, ultimately lifting prices. So we don't subscribe to the 4-year cycle view. That doesn't mean there's not risk to crypto investing. Of course, we've been through lots of drawdowns. But we don't think that there's some need to expect a broader cyclical top. And I think that this is really the key dividing line among crypto investors today. Do you kind of believe the 4-year cycle thesis and are taking a step back from Bitcoin at the moment? Or do you subscribe to the structural bull market and these sort of fundamental drivers? I definitely put Grayscale in that latter camp. Structural bull market driven by fundamentals, no 4-year cycle top this time around.
Yeah, no, I think that if people were to associate crypto with always having that 4-year cycle, those would really be the same people that would associate semiconductors with having that very cyclical nature of like 2 to 3 years. And it doesn't even seem like we're topping in the cycle when it comes to the semiconductor industry. In fact, I mean, I've studied this pretty closely, is that previous cycles for semiconductors has been mostly centered around a compute for residential and consumers basis, right? So they're always changing their computers and upgrading it every 2 to 3 years. But when we think more of the data center perspective, which in this case would also even apply to crypto, when you think of institutional versus like hodlers and a lot of traders in the nature, when you get that large accumulation of Bitcoin, like you said, from an institutional standpoint, especially we could talk about the legislative factor in there as well. It kind of dampens that cycle or even the oscillation of the cycle to the point where it's like, if we are in a cycle, it's going to be a lot less shallow than the previous cycles where we get like 70% from its all-time high. Like today, we're probably like 30% away from its all-time high in Bitcoin.
Yep.
But like, what if What if we just had the end of the cycle, and what if we're about to start a new cycle? You could even argue the same thing that happened for the markets last April, right? When the markets pulled back about 23% intraday from its all-time high, we basically started a new bull market, if you think about it, on a non-closing basis. What if that happened with crypto? What if we are in that with crypto? We haven't exactly made that new low that we did last April in Bitcoin, but like, what if we already ended the previous cycle and we are starting a new one? And I do think that whenever it comes to markets on maybe the medium term basis, a lot of it really has to do with sentiment positioning. Right now, I would say that the sentiment with Bitcoin is just not good at all, right? Like obviously that was something that I brought up in the beginning,
Yeah.
but you could even see it in the price, right? Now, what happens if we get a favorable economic environment, a favorable financial environment or fiscal environment, like you're seeing with legislation? We can actually touch on the legislation soon, but like we're obviously getting that favorable environment from a monetary standpoint, right? The Fed is going to cut rates. They're going to cut rates 2 or 3 more times. I think, in fact, it's like about a 50% plus chance of 3 or more rate cuts next year in 2026. They're going to start quantitative easing. The consumer from the bottom side of the K-shaped economy is obviously suffering, or at least not doing as well as the upper side of the K-shaped economy. We're heading toward looser monetary environment. And if you really think about it from a global M2 money supply perspective, it's going to continue expanding. But then at the same time, you have the sentiment just not really bullish in crypto. Now, we've seen it where sentiment is on the bad side, where positioning is somewhat on the average side. And then what happens when the price goes up? People just chase it, right? Like crypto has made that explosive move so many times. And you even have today where like you have a lot of institution continuing to buy crypto. Like you could see it across the board, you could see it in your research, and you even said you could see it with clients and everything. Is that when the price follows, the institution is already set up. But then you start having that momentum build back up in what Bitcoin really runs a lot of on a short to medium term basis. Long term, obviously, it doesn't make any sense to be selling Bitcoin here if you still do believe in the long term nature. But from a short to medium perspective, like once you get that momentum back, this thing is just going to run back up. Now, you were talking about the legislative factor with the U.S. government. I'm assuming you're talking about the U.S. government, maybe sovereign governments as well. Do you want to touch a little bit on the legislative side? See, like I haven't really dug too much into that, but maybe you can bring some light into that and maybe inform some of the audience on it.
Yeah, absolutely, and great rundown on some of the market points. I'm happy to come back to that. Look, it can be easy to forget that aspects of the crypto industry in the United States still do not have a full regulatory mechanism around that, including institutions like exchanges and many of the assets in the space beyond Bitcoin. We are confident that it's considered a commodity by regulators, but that question has not been answered for many of the other assets in the space. So, as much progress as we've made this year in terms of regulatory clarity, removing some of the lawsuits and investigations against crypto companies. We had the Genius Act on stablecoins. There's been lots of other changes at SEC level. We still really have a long way to go in terms of giving a full, clear regulatory picture for the crypto industry in the United States. And you need that for it to really fully integrate with traditional finance. We're not going to integrate stable coins into futures exchanges or integrate crypto trading into Wall Street desks and all this stuff until you have a regulatory framework for the industry. And we don't have it yet, despite the progress that we've made. The U.S. Congress is working on that, and we call that piece of legislation the Market Structure Bill. The House passed something about this in July called the Clarity Act, and that passed on a bipartisan basis in the House of Representatives in July. The U.S. Senate has been working on it for the last few months, and we continue to see the ball move down the field. My expectation, Grayscale's expectation, would be that the market structure bill becomes law next year on a bipartisan basis, so that we will see both Republicans and Democrats support really fulsome crypto industry regulation here in the United States, and that'll become law at some point next year. And I think similar to the Genius Act, which kind of catalyzed a focus on stable coins and on Ethereum because it's really the home for many stable coins today, I think that that'll be a similar positive catalyst for the asset class next year when when institutions are able to say, okay, I can engage with this exchange, I can engage with this asset in a regulated fashion. I think that'll be a big important positive. So that's the other key thing that I'm watching for next year. The macro points, Sam, that you touched on, easier monetary policy, a healthy economy, these issues, and then more regulatory clarity, exactly as you're highlighting here.
Yeah, I mean that only makes a lot of sense. I didn't really look too much into this as far as the Clarity Act goes. Do you want to go a little bit more into the details of this? And I can actually share this article. You actually shared it on your Twitter account, so I'll share that link for a lot of the audience in case they want to go check it out. But do you want to go into a little bit of the details of the Clarity Act?
Yeah, I think the key thing to touch on is that um, people that have been watching this for a long time know that there's been this long running debate about whether crypto assets should be considered commodities and regulated in that type of way, or whether they should be considered securities and regulated in that type of way, or maybe different something else. And one of these pieces of legislation gives a third category called ancillary assets that could cover a crypto. It's all, the debate is still ongoing, but basically, what is the regulatory status of these assets, and who is the regulatory agency that oversees them? If they're commodities, that's the CFTC. If they're securities, that's the SEC. And so these pieces of legislation, there are different versions. There's the House version. There's a couple different versions in the Senate. They all have different answers to that question, and that's all being hashed out right now. So for your listeners that have that follow this fairly closely, you'll know that there's been meetings in the last week, and they'll continue this week with senators as well as crypto and TradFi representatives on all of these topics. So it's still very much a work in progress. But the core issue is clarifying what is the status of these assets, where can they go, who can hold them, who do they have to register with as far as agencies, what do they have to disclose about their activity, what they're doing or what insiders are doing. These are all important aspects of how the financial system works, and the rules exist to protect consumers and the economy as a whole. So that's why we have regulation in traditional finance and why it's needed for many of these crypto assets. And the market structure bill essentially covers all of these topics. What's it going to mean in practice? Maybe that's the most important thing. In practice, it's going to mean that projects that have revenue, for example, are going to have a regulated way to maybe distribute that to users. So fee switches and buybacks and these types of debates that we've had in crypto for a number of years, these things should be clarified in the process of legislation. I also believe that it's going to allow businesses to issue tokens as a part of their capital structure. This is one of my views here, that you will have companies that have stocks, they have bonds, they have hybrid instruments like preferred stock or convertible bonds. These are the ways that a company can capitalize itself today. I believe that regulatory clarity here will allow tokens also to be a part of corporate capital structure, and you will see major companies issue tokens. So long way to go. This is a great chart to highlight this. Maybe I'll carry on this chart as long as you've pulled it up. So regulatory clarity, one of the other things that it's going to do in practice, Sam, is going to allow us to bring the tokenization vision for markets really to reality. This is a kind of theory that we have, or a thesis that we have about where capital markets are going, where financial markets are going over the next 10 and 20 years. And the thesis is that assets will be tokenized on blockchains to provide user benefits. And what's being shown on this chart here is that tokenized assets today are tiny. There's a lot of buzz about them, but they're a tiny number, something like $30 billion. And when you say billion, it sounds like a big number, but really that is only 0.01%. Or 1 basis point of equity and bond market cap. And equity and bonds are only one type of asset that is tokenizable. So tokenized assets are going to grow many times over the next couple of years. I think 1,000x over the next 5 years is a plausible number, to be honest. So I really expect really dramatic growth rates here. And bringing it back to the regulation and the legislation, that's going to allow this to happen. We need those clear rules of the road to open up these innovation pathways. And once we have that, that'll bring more value to crypto. So assets like Ethereum, where many of these tokenized assets sit, or assets like Chainlink, which facilitates the process of tokenization, these will benefit from this mega trend.
Yeah, speaking of tokenized assets, obviously there's Robinhood who's been talking about tokenized assets. There's
Yeah.
other companies as well that do offer those products. We don't really need to get into that one, but it's obviously becoming something for the retail investor, or someone who's not not an institution, or maybe like not what's the term for the people who have over $1 million of income. They
Accredited
can become an
investor.
accredited investor. The access to these private markets that a lot of people really love to. I mean, you could see that SpaceX is already near an $800 billion valuation. Anthropic is around 350. OpenAI is around 500. Being able to offer these private investments to the average retail investor through the use of tokenized assets is another segue into that industry that a lot of people really never thought about. And I mean, crypto is the only way you can do that. Otherwise, how much fun you get? Like these companies in these rounds, like they're only taking maybe like hundreds of thousands of dollar orders to be part of these rounds, right? Like, so like Joe Schmo can't put in like $300 and buy part of OpenAI. Like he needs to have some sort of connection or whatever. But being able to offer these markets, these private markets that a lot of retail investors have wanted to be taken advantage of, and now you're talking about a market that's only what $1 billion. Yeah, that is easily going to be a $1 trillion market at some point in the future, maybe in the next couple of decades, or maybe in the next decade. If that does happen, that's a lot of liquidity being pushed toward not just the private institutions, or not just the private investments themselves, but toward the proxy of investing them using tokenized assets. And that only continues to fuel the usage of crypto in terms of a real use case for it. But not only that, but also these other companies that are facilitating these transactions as well, and opening these doors for not just EU investors, but also people around the entire world. I mean, this is a remarkable chart you have here. Like, what if real estate? We're already seeing the real estate market kind of like in a standstill here, stagnant a bit. And I don't think the real estate market's going to pull back, especially not even like what we saw in 2008. But like, what if we play a little bit of catch up with tokenized assets? What if tokenized assets starts to supersede commercial real estate? Especially when you think about a lot of the high rises being built for residential real estate versus commercial. We don't need offices anymore. But like, what if that actually does happen? That would really argue that we're in a very, really early stages of crypto when you really think about that.
Oh, we are definitely in the early-ish stages. How we like to characterize that, and it's a great summary, Sam. We like to say that we're in the mid-90s sort of place today with crypto. You think about where the internet itself was in the mid-90s. You were well past the very beginning of the story, where people were building things in their garage, and the Defense Department was networking its computers, these sorts of things. So you, of course, were well past that very early part of the story by the mid-90s, and you were starting to see applications come to the market that allowed a mainstreaming of access, web browsers and other things that allowed the mainstream to get online. Today, that's where we think crypto is, that you're having an improvement in the technology. These are things like the blockchains themselves, the speed and the cost of transactions, and the other associated infrastructure like wallets. So the user experience is getting better. And then you also have regulation, which we've talked about, but which is really important. The crypto blockchains, these are financial technology. And so the regulatory side of it is very important, so that consumers are protected, and that the financial system as a whole is protected, and that we monitor against illicit activity, all of these types of things. So better user experience, clear regulation. This is facilitating people getting on chain, the mainstream getting on chain, just like the mainstream kind of got online in the mid-90s. So we're not at the very beginning, where Satoshi was still hanging around and things, but we're at a mainstreaming moment for crypto, and this story is going to then transform for 5, 10, and 20 years. How capital markets and how mainstream finance works, and the assets, in my personal opinion, will deliver strong returns alongside of that. So, I don't even think you need that long of a view, a multi-year view. I think, of course, if you trade week to week, there's a different set of things that you need to keep an eye on. But, to me, like, the longer term outlook for crypto is so compelling that it's easy to stay optimistic, even against, on again, off again drawdowns and some of the kind of low volatility they have in markets in the last week or two.
Yeah, I know. It has really been it has really been like a head swoosh, just like the market's going back and forth. But I think people who have been really focused on more of the long term, not just crypto, but in like real world, sorry, stocks and assets and everything on its own, have really basically just been chilling. I mean, there's a lot of long-term holdings that I've had opportunities to add to, especially last April, that I'm just sitting on. I mean, you don't really get those kind of opportunities too often. And this might be like one of those times where it's like, oh, I could have bought Bitcoin at like 89K, whatever it's trading at today. And then later on, it's like 150K in 2026. And people are going to be like, oh man, that was an opportunity. It's always going to be that hindsight bias, right? Like I still remember last April, they're when Amazon was trading in like the 160s, Google was in the 130s, and a lot of these companies were like or a lot cheaper at the time. I wouldn't say they were cheap, but they were cheaper at the time. You look at it today, people are like, "Oh, I should have bought it at that price," right? And it's probably going to be the same case for crypto. I mean, who would have ever thought that you had the Silicon banking scare back in 2023? Who would have ever thought that would have marked the bottom for crypto for
Right.
that cycle, right? Like I would have never thought that. In fact, I thought that would be like the beginning. I don't say the end, but like that would have been the beginning of a massive bear market, a continuation of it at the time. But from a long term perspective, like these are really the opportunities you got to take advantage of. I mean, it's never really about, from my perspective, and this is from probably like a retail perspective as well. It's like never really about like timing the bottom. Like this is the bottom. Let me just buy in heavy. But also, if you buy $10 of Bitcoin every single day for the last decade, you would be set. You wouldn't have to work anymore. You wouldn't have to do anything. And buying $10 of Bitcoin back in like 2013 looks a lot better than buying $10 of Bitcoin today, because of that $10 is probably like what, $1,000 an hour or something. I think this is the difference between what institutions do and what retail investors do. Is that institutions don't look to trade the markets; they look to just buy and accumulate most of the time, right? And maybe a little bit of trimming from the top at some point after it's went up like 10 times. I mean, this could be that opportunity. In my perspective, I wouldn't be adding to my HODL portfolio if I didn't really think that was the case, right? Like, if I'm buying today, does it really matter if it's like 20% down tomorrow or the year after that? Especially if I don't need the money for at least 30, 40 years, like, does that really matter? And I think that goes along with the short-term perspective of the way people look at the Bitcoin market or the crypto market right now, right? But institutions sure are not doing it. They're not like figuring out like, well, I could buy Bitcoin 10% cheaper next year, so maybe we should wait. They're just like, no, let me just buy it, or we'll just buy it now because we want our clients to be happy in 10 or 20 years. And I think that when you read the report that you guys provided, and when you read a lot of the other information that's out there, like, look, don't be concerned where it's trading at tomorrow or even the year after that. Just know that I don't want to say, King's Crown said it on X. I don't want to say it's guaranteed. Nothing's ever guaranteed, ever. Like, you can never say anything's guaranteed. But there's a pretty good probability that crypto is going to be trading higher in about 10 years, right? And as long as you're outpacing the S&P 500 returns at 8% compounded growth annually, you're going to be doing pretty fine, right? I mean, if that's really the goal, that's really, if I feel like, what's the point in buying crypto if you don't think you're going to beat the market over the long term? Because then you might as well just continue buying the market. But I do think that it provides that ample opportunity for the long term just to accumulate, and it doesn't have to be like in major amounts, but like just dollar cost average. Like, in your opinion, and you don't need to like really disclose this from an institutional perspective, but like, in your opinion, is that you're probably more of a long-term investor, right? When it comes to Bitcoin and other assets, like, I'm sure you're not reading the charts and trading everything left and right, but like, in your perspective, do you think that Bitcoin is a good buy right now to dollar cost average into?
Well, let me answer all that. I mean, I do look at charts and everything else. When we're trying to, we try to give risk management advice to our clients, both for these longer run questions, but also for the shorter run questions. We have lots of different types of investors, and when price goes down 30%, I can assure you they call me and they ask what's going on. And they want to know the short term outlook as much as the long term outlook. So yeah, we look at technicals, we look at charts, as part of the process to completely understand the markets. I think that's I think charts are absolutely a valid input into anybody's investment process. Look, I think dollar cost averaging is easy advice. I think that's right. You kind of keep moving into asset classes or individual assets, securities, whatever that you like, and I think that's the right case for crypto. I would stick my neck out a little bit further and say that I think at current prices is a pretty compelling time to accumulate the asset. And so if you're dollar cost averaging a bit by bit, I think when you see big drawdowns like this, 30% drawdown, and if it hasn't changed the fundamentals, then that is the time that you're supposed to deploy more capital into an asset. I mean, outperforming in markets is tough, and a lot of people don't outperform it by definition. And I think what you have to do is it's really about two things: about having your own thought process and your own research, coming to your own conclusion on why the asset should be going up over time. And for me, I have a lot of conviction on the crypto asset class, and expect in 5 and 10 years time it'll be a lot larger than it is today. And then you need to have the other part of it is you need to have the courage to buy into that thesis when everybody else is nervous about it. Finding these opportunities where, weekends, I guess, to use crypto terminology, are stepping away from the market, and you can come in and be diamond hands into the market. Like, just crypto is no different than stocks or bonds or currency trading or anything else. It's about having your own process, doing your own research, and having the courage to put your money into these assets when they're down. And I think that's where we are today. I think that you have a very solid asset class with a lot of positive trends at the moment, and it's beaten down for a variety of reasons we've talked about. And some of this is concern about 4-year cycles. Some of it is the wipeout of leverage in some of these offshore kind of trading platforms. To me, that's a good time to be accumulating this asset class, for the medium term, and that's absolutely the message we've been giving to our clients in the last couple of weeks.
Yeah, that's great. I mean, what better time is there to buy Bitcoin than 30% from its all-time highs, in my opinion? I mean,
well, even
it
lower, I
was,
guess, is
yeah,
even better. But yeah,
yeah,
I
yeah,
think
that's true.
you're supposed to use these. If you believe in the asset class, drawdowns are an opportunity. Of course, everyone has risk management challenges and overweight, underweight, and all this kind of a thing. But if you believe in the thesis, it's an opportunity to add capital to a good thesis at a more compelling price. And I think many institutions are going to treat it that way. I do not think that they will be put off from the structural thesis by this recent pullback, and that's definitely the feeling we get talking to our investors.
That's right. Buy low, sell high, right? I feel like
Pretty simple.
in
Yeah,
those,
pretty simple.
what we've always seen in the markets is like buy high, sell low, right? It's like it's such a simple concept: buy low, sell high, and for most, it's probably not sell at all. But I'll tell you, when Bitcoin's at 126,000, that's when everyone's going to get excited. When Bitcoin's at 90,000, you know that meme where it's like, oh man, I should have bought it when it was 80,000. And then it's at 8,000. It's like, I'm not going to buy that thing. That's crazy. It's going to keep going lower, right? It's the mentality that happens, especially when you think of high beta assets, and Bitcoin is high beta comparative to low beta assets in the market. You see what I did there? Low beta.
Yes, I
But
like that.
anyways, yeah, I know. So, anyways, I think that was great. I think we're hitting about 45 minutes over here. We got a few events happening for the week. We already talked about FOMC. We went over the report. We talked about the Solana. We talked about the Solana event coming up in Abu Dhabi. Is there anything else you wanted to close off the audience with? any talking points, maybe any last commentary in the FOMC meeting coming up, what we think Powell might say, if he's actually going to spook the markets or not. Like, what are your opinions on that?
Yeah. Look, I think my message would be that investors have a great opportunity to add to crypto through the ETF structure now for the first time in some new assets. And we're able to bring new crypto ETFs to market: XRP, Dogecoin, Chainlink, Solana. These are all available in ETFs. So investors that have, say, tax advantaged accounts or other types of brokerage accounts that have been looking to add crypto into those types of places now have the instruments to do that. And the market is giving you a price potentially where this is a compelling opportunity. So to me, I would, do your own research. Every investor is different. Everyone is managing a different set of risks and personal financial goals. But that being said, you have newly available instruments, very convenient ETF instruments that can go in any brokerage or tax advantaged account, and the market is down. So potentially the price is a compelling add. To me, that's what you're supposed to be thinking about as people are heading into the end of the year and they're thinking about taxes, or they're beginning the part of next year and they're thinking about how to allocate their assets. I think crypto is giving you a good look at the moment. So don't hesitate to reach out to Grayscale. We're happy to talk about the research behind each of these tokens or the products that can give you access to them.
There we go. There we go. There you have it. So I have your Twitter handle at the bottom over there, low beta underscore. Great profile picture, by the way. I really like the interviews you've been having on some of the mainstream medias. And looking to continue picking up the show again next month. We're definitely, I honestly, 45 minutes is a very short amount of time to cover so many topics, but my only guess is I don't know that there's going to be a lot more to talk about next time because I can't even think about it. The news changes so quickly, especially in the crypto markets as well. But like the next time we do this episode, it's going to be 2026, and I'd imagine between now and 2026, a lot's going to happen,
No
right?
doubt.
Like, are we going to get that Santa Claus rally? Is Bitcoin going to be at new all-time highs? According to the poly markets, it looks like that Bitcoin is actually going to hit 100K. There's like above a 50% chance for that to happen. I don't see why it's not going to happen unless the markets just roll over from here. But we'll see. Wednesday's a big day. Hope you guys enjoy tuning in. Like I mentioned, Zach Pandl, Grayscale Head of Research. His Twitter handle is at the bottom. Appreciate you guys tuning in. Go ahead and subscribe to the Wolf YouTube channel. Keep a lookout for future podcasts that we have. And it was great having you on here, Zach.